Hello traders, and welcome to lesson 2 in the beginner's Forex trading course. So in this lesson we're going to look at currency pairs. So what is a currency pair? Well, it's made up of two different countries' money. So for example, the euro US dollar, which is the most popular currency pair. Now what this means is the euro versus the US dollar. The first currency in the pair is called the base currency and the second is called the quote currency. So if we look at an example from a broker, this is how the price would be displayed, okay? So this is our base currency and this is our quote currency. Now the value of the base is always 1 and the value of the quote currency is always changing. It will constantly fluctuate. So these numbers here will always be moving. Now the way you read this price is €1 equals 1.05663. Remember the base is always 1, so it's €1 equals this many US dollars. Now, currency pairs are split into groups, and there's 3 main groups, okay? So you have the majors, the crosses, and the exotics. Let's look at some examples of each group. So the majors are the most traded currency pairs in Forex, and they typically involve the most powerful and widely used currencies like the US dollar. So you can see a list here of the major currency pairs. I'm not going to read them all out, but they mostly involve the US dollar. Now these currencies are considered major because they have the highest trading volumes and they're associated with countries with strong and stable economies. Now traders often find these more liquid and less volatile. So what that means is there's more money in these pairs. There's more money in these markets, and the markets are easier to trade. They behave a little bit better than some of the other ones. So let's have a look at the crosses then. So the crosses do not include the US dollar, but they do include other major currencies. So you can see we have the pound, the euro, the Aussie dollar, Japanese yen, etc. Now, cross-currency pairs can offer different trading opportunities and are often used for diversification or to trade the relative strengths or weaknesses of two non-US dollar currencies. Finally, we have the exotics. So exotic Forex pairs involve one major currency and one currency from a small or emerging market economy. So you can see that the examples I've shown you here all contain the US dollar, and they are paired with an emerging economy, so like the Turkish lira, the Hong Kong dollar, South African rand, etc. Now, exotics are quite difficult to trade. They tend to have low liquidity, high volatility, higher spreads. However, they can provide some very good trading opportunities. So you now know what a currency pair is. You've seen an example of price, and we've looked at the majors, the crosses, and the exotics. In the next lesson, we're going to look at prices.